S&P 500 in the past 5 days up around 1%, but the Nasdaq has taken a bit of a kicking. Interesting, down almost 2%. There has been good news for investors in the shape of strong earnings from the big US banks. However, JP Morgan Chase CEO Jamie Dimon, as is his wont, expressed caution about the economy. And we do have these US-China trade tensions. Let's get more from Dec Mullarkey, Managing Director of Investment Strategy and Asset Allocation at SLC Management. Dec, great to see you as ever. Thanks for joining us.
Good to catch up, Andrew.
What's interesting you most in the market right now? What jumps out for you?
Well, first, maybe we jump into Jamie Dimon's comments there, because he definitely set off a reaction. And you saw then when the regional banks came with their earnings, or certainly two yesterday, the reaction there when they said there was some credit issues. So the positive thing, so first off, I would say we're expecting very, very solid performance in terms of earnings this season. And banks have already shown that. And it's interesting, you mentioned in the opener there that, markets are opening up a little firmer. Some of that is reaction to, Trump and mitigating a little bit of the tension with China there. But also the regional banks that posted earnings this morning were strong, and they did not issue or did not comment on any credit concerns. So that is the one thing that has roiled markets in the last few days, and it kind of shows how sensitive this market is. Valuations are high and all of that. So they're very sensitive to any emerging risk. And the odd thing was there was a knock-on from the regional banks, even to European banks, and they have had a great year. So I think there's this nervousness among investors with around valuation, and that any crack, if you will, in that growth story is throwing them off. Again, I think the credit situation, certainly for corporations, in great shape, strong balance sheets and all of that. There could be some cracks in consumer credit as you go down, and something to watch. But I think right now a lot of these are more of a one-off.
The tech rally, broadly speaking, you think still has room to run?
I certainly do, and we did get two indicators of that this week. So TSMC, who pretty much top manufacturer across the globe, out of Taiwan, they're the go-to for everyone. They're actually posted strong earnings and also increased their outlook and said that AI demand is very strong. And then another counterpart, ASML out of Europe, which is again one of the top designers and puts out a lot of equipment, they had the same story. So I think that remains intact. But however, what this market will want to see, and particularly going into next year, is that the AI spend is starting to show up in real adoption and revenue. So that's where the challenge is going to come in. But everything we see right now suggests that, yes, that still has room to run and is still pretty vibrant, if you will.
The U.S. and China on trade, I said this earlier on the show, this conflict is going to run for decades. They're two superpowers, but they are jostling for dominance in technology as well as so many other areas.
Yeah, there's no question. And, both of them have strong cards, but I wouldn't recommend either of them overplay their hand. And there's an interesting development really right now with China, in terms of how they're being a lot more forceful and belligerent than they have been before, and they're hitting back with the U.S. tit for tat. But I believe that confidence is coming from where they stand in their own tech development and how they feel that they can advance their own chip manufacturing, particularly this stance that they're taking on rare earths. So we're at an interesting point, but I think definitely this is a new China, a very, very confident China, that they can wait this out with the U.S. and really have a standoff. And, President Trump's rhetoric today is definitely a walk back and a softening, saying, hey, we want to do business. And Bessent has repeated the same thing, and has said a couple of them are all getting on board saying, let's make a deal here. So an interesting turnaround. That is encouraging, but we'll see if this still continues to get dragged out, and it may.
Would you be a buyer of some of the big chip stocks or chip-related stocks like Taiwan Semi or ASML?
I still think I still think they have room to run. And those two you mentioned, they're top brands in what they do. And they do the nuts and bolts, which is manufacturing. And believe me, they have a full book. I think they really have a lot of growth ahead. ASML had struggled for a while and is having a good year, but I do think there is more room to run there. And there's no question they're the engine of the future, and software or designers can come and go, but the manufacturers, you need their equipment to make all of this run and get these back into machines and operational. So yes, I think they're really some of the top of the heap here in terms of performance across tech or prospective performance across tech.
We're hearing so much positive commentary about gold. Is there a risk that all the money that's going to go in has already gone into bullion?
So it's a great question. It's hard to call the top in gold. I mean, the one thing I will say, is that the technicals around gold are always very strong. It may come as a surprise to hear that very little gold is mined in a single year. It's like 1% of the existing stock. So you essentially have this fixed stock of product, and a lot of the demand has come from retail investors through the ETF channel and central banks. And there's no question the retail investors had been underrepresented in terms of maybe their allocation to gold. And pretty much every wealth advisor is saying, have a little bit in there for defensive. So I think that still has room to run. And therefore, going into next year, a lot of the forecast is that gold could be up another 15% next year. And that seems reasonable, maybe getting to a 5,000 target. Again, I'm not necessarily calling that, but there's a lot of fundamentals about gold. There's a lot of dynamics in the demand supply and supply being very light. I think we're at that point where if you've got geopolitical risk, which is going to continue, all those types of risks that gold is somewhat of a hedge against, those are going to continue. So there's room to run, I think, Andrew, but it's still a tough one because people may start to take profits, and some of that could go away quickly, the bid. So,
Dec, thanks very much for joining us. Have a great weekend.
Thank you.
Dec Mullarkey, Managing Director of Investment Strategy and Asset Allocation at SLC Management.